Bitcoin is up 80% year to date. And this begs the question, does it make sense to take some profit? Right? When things are going rosy, that's when you should be selling. You should be buying, obviously, when things are low. Buy low, sell high. Now we went up 80%. Now, in this video, I want to look at on-chain data. There is some very interesting on-chain data presented recently in the Glassnode newsletter. And this on-chain data gives us an idea of what other people are doing. How did other people react during prior bull markets? When is there a potential signal to sell? And are we already at this place where we could potentially thinking about taking some chips off the table? The first chart that I want to share is the long to short-term holder threshold. So this looks at the long-term holders here in blue and the short-term holders here in red. And it's very interesting how there is money flowing from the long-term holders to the short-term holders. And the Bitcoin price tends to peak when it's mainly being held by short-term people, which makes a lot of sense, right? When you've got short-term speculators in the market, when it's simply just a very short-term blip in the price, then they might already be selling. When you have a longer time horizon, when you've already held Bitcoin for several years, then it takes quite a bit of an appreciation in order for you to start selling. And so what do we see right now? We still see the long-term holders are not selling. This blue line is not going down. This red line is not going up, even though we have already seen our 80% increase in the price. Now there's another interesting chart, something that very often gets confused. I've actually made a back test on this. Now this chart shows on a rolling level how the performance of Bitcoin, the price performance, is doing. So you can either simply just look at the rolling monthly performance or at the quarterly performance. So you simply just look at today's price versus 1 month ago and you look at what was that performance. And then you look at this for yesterday and the day before that and you check out what's that performance. So you're rolling this performance over time. And then you can see potentially peaks and bottoms. And I try to figure if there's some kind of correlation here. So this is a chart that's been presented here in the Glassnode newsletter. When I calculated this, right, I simply calculated when the performance was, say, minus 10% in the last month, how would it then be in the next month? Is there some kind of correlation? And I checked this for all kinds of time frames, for 1 year, 2 year, also for 1 month. How strong is potentially the correlation between past performance versus future performance? Where is potentially the correlation the strongest, or is there maybe negative correlation? When you make that analysis, you figure out that these tops are pretty much useless. So when you simply just look at the positive correlation, right, when there was positive performance in the past, how likely is it that there's positive performance in the future? You look at this at all kinds of different time scales. You don't really see a strong connection between those two. The only difference is when you look at the negative performance and you look at very long time frames. So when you look at, for example, if there was strong negative performance, you can do this both in Bitcoin as well as in the stock market, it works for both. When there was strong negative performance in the last 2 years, then that tends to be outsized positive performance in the next 2 years. So at least 2 years, you can also do this for 3 or 4 years, but if you have at least 2 years of negative performance, then this does work in the reverse. So then we're simply just very, very depressed, and that's then when you want to buy. So the only way to use this chart somewhat reliably is not to look at these tops, and not to think of, oh, we have to go close to similar tops in the past. You have to go to something similar. The only way to use something like this, like a rolling return, is to just look at these bottoms. And also in this chart even, we can see this, right? These bottoms tend to be at similar kinds of magnitude. So only if we are bottoming, then we see some kind of a connection between the low and the potential positive performance that happens in the future. Now here's another thing, another mystery busted, so to speak, and that's the correlation of Bitcoin to gold. Now, a lot of people think that the correlation between Bitcoin and gold might be relatively high because they serve similar purposes, right? They both hedge against government overreach. And so when there is regulatory uncertainty, they might both appreciate and vice versa, right? When things stabilize. Now, this is the correlation coefficient between Bitcoin and gold. And look at how this is going from positive to negative pretty constantly, right? This is a 30-day correlation. It's simply just oscillating between 0 and 1. This is no strong correlation at all, right? If you had strong correlation, you would really see, at least in either direction, a pretty constant line above or below. So for example, if you compare, say, a stock index with an individual stock, you will always see positive correlation. You will always see this orange line being above 0. Now here for gold and Bitcoin, we don't see this. We see this oscillating all the time. This is also true on the 90-day. It's also true on the 365. In other words, there is no strong correlation. Or the way to see this is there is still benefit in diversifying Bitcoin with gold. So if you want to diversify simply due to the price movements, you want to cancel out different risk, then holding both in your portfolio does make sense. Make sure though, if you want to cancel out some of this Bitcoin volatility, that you lever up the gold exposure, right? You need to have way more gold exposure than Bitcoin exposure because Bitcoin is way more volatile. It moves way more each day. So you can't just have $100 in Bitcoin and $100 in gold and expect to get good diversification benefits from this. You need to beta adjust this. Now here's an interesting chart showing different correlation coefficients. So this is now for the last 180 days. And we look at the correlation of Bitcoin to the rest. And over here we can see, right, gold is pretty much not correlated to anything. It's very, very close to 0, this correlation coefficient. So gold is really a relatively strong diversifier. But so is Bitcoin. So once we look at Bitcoin versus the Dow Jones, for example, or versus the S&P 500, the correlation coefficient isn't that high. It's still relatively low. Once we look at Bitcoin to the rest of crypto, of course, these correlation coefficients are high. So you can't really diversify away from crypto, away from Bitcoin using other cryptocurrencies. You can't just say, I buy Bitcoin, and I want to diversify this by buying altcoin ABC. This doesn't really work if you want to cancel out price movements because the correlation coefficient is high. What does work though is if you buy Bitcoin, if you hold stocks on top of that, and if you hold gold on top of that, because those are pretty much different asset classes, and different asset classes tend to be correlated less to one another. So the typical asset classes are, of course, crypto, it's stocks, it's property, and it's precious metals. You could also throw in bonds, etc., but in the end, bonds are more or less just manipulated by the Fed, right? Wherever they put the current Fed funds rate, this is then how your bond portfolio does. So I'm not really a fan of getting heavily into bonds. This is a chart I really, really like because this tends to be a very good indicator of when we might potentially top and bottom. And this even worked during the medium short-term peak in 2019. This was a peak I was unfortunately not able to capitalize on at the time. So let's go back in time. Here's where I started dollar cost averaging into Bitcoin at roughly 7K. And I bought and bought and bought, and when it crashed, I bought further. But I did not really sell here at the 11, 12K. And this was some kind of a problem, right? Because with the Corona crash, we went down from that top more than 60%. Now it's hard to sell during such a time because we are still pretty far away from the all-time high. But this indicator, the percent supply in profit, a 7-day moving average from that, this would have almost created a signal here, right? One would be able to take profits here. And not a lot of indicators flashed during the time. Now, currently, we are still very far away from this. So this is another potential sign that this is not the end, that 80% year to date is not high for Bitcoin, that if you can stomach the risk, if you can stomach the volatility, if you can stomach potentially going down 20, 30% temporarily, if you can take that random noise, then maybe it makes sense to simply just continue holding until the market gets a bit more heated. Two more charts. The realized cap hodl wave. So this looks at how much short-term speculation is in here. Similar to the chart that we've seen at the beginning, this looks at what percent of Bitcoin has moved in the last 3 months. And this tends to peak during speculative manias, right? During the peak just before the Mt. Gox and Silk Road collapse. It peaked just before the ICO collapse and also peaked here at the beginning of 2021. Currently, we are very, very low, very far away from any kind of short-term speculative mania. So really, it's time to still continue on hodling. Look at this, the miner revenue from the Bitcoin fees adjusted by the volatility. An interesting measure as well. This tends to turn positive whenever a bull run starts. We did have a little bit of a fake out in 2019, but currently this turns bullish one more time. Very, very positive news. Now we can simply just ride those long-term multi-year waves. We can also try to trade a bit more actively, right? To get these shorter-term trends right. For that, I've backtested the best moving averages for Bitcoin, which are part of the premium membership that's down below. Feel free to check that out. I've also made a video discussing the fundamentals of Bitcoin, as in why is it a good investment over 5, 10 or 15 years. That comes up next. That's directly over here. Looking forward to seeing that video, and thanks for watching this one. Bye bye.